Welcome everybody to STR Intel. I've got Darren Pettyjohn with us today. Darren is actually you're still the CEO of Proper Insurance, right? Or are you the CEO of Waivo? You're the co-founder, right? So.
Yeah, I just do co-founder because my role is sort of, we don't quite know what my role is, to be honest with you, but I started both companies, so we leave it at that. We just put up co-founder.
Okay, gotcha. So yeah, Darren has been working with Hosty for years, helping us provide short-term rental insurance to our clients, their different homes, and he just started Waivo, which Waivo is basically damage insurance waiver. So it kind of replaces Airbnb's damage protection insurance. It replaces, other types of insurance that may be up to $2,500 in coverage. So like small incremental damage that a guest may cause. So yeah, welcome to the show. Thanks for coming on. And I've also got Philip here. Philip's my brother. And then we've got Killian Gordon, which is our business development manager. So yeah, we're going to be talking about everything short-term rental insurance, vacation rental insurance, damage protection, how to protect yourself against liability in this space, because it's a pretty new industry, and this stuff is just now starting to get figured out. And a few years ago, we didn't know what to do when it came to short-term rental insurance, so we found Proper Insurance, which has kind of saved us, and they've come in and helped our owners really provide the protection they need to operate as a short-term rental.
Yeah, so maybe we can even start off, because I know, Evan, when we got into this industry, we didn't know there was a difference between, let's say, long-term tenant insurance, renter's insurance, and STR insurance. We didn't know there was even a difference, and there's a ton of different situations and scenarios of what is insurable and what's not. We found a lot of that out as we've gone. But Darren, I guess a question for you, just to get us started. How'd you get into the insurance field, specifically STR?
So a gentleman I used to work for years ago was the largest insurer of bed and breakfast properties in the United States. Traditional B&Bs, and he started getting a lot of calls from B&B owners figuring out this VRBO thing, right, way back in the day, and they kind of started transitioning their properties from a traditional bed and breakfast to a vacation rental by owner, where they were no longer on site, right? So think of it like a beautiful Victorian home, except you could rent it out as a vacation rental property. And fundamentally, the easiest way to explain it for your audience is with the new short-term rental industry, there's multiple uses of the property, right? And each different use of the property carries a different set of underwriting guidelines. The whole concept of insurance is for us to try and figure out what's a good risk, what's a bad risk, and what's the right premium to charge, right? So if we think of a bunch of people who have car insurance and we collect $1 million in premium, the insurance company obviously is going to pay out claims, but their target loss ratio is going to be about 20%. So we collect $1 million in premium, we pay out $800,000 in claims, and then we divvy up the $200,000 in profit, right? That's sort of the concept. So the problem is, if you think of a traditional short-term vacation rental, number one, the owner of the property, the person who actually owns that property, they may stay at their vacation rental property for a week or 2 weeks or a month out of every year, right? They contact you guys and they say, look, every 4th of July weekend, I want you to block this off because my family and I are going to stay at this investment property we have, right? So right there, that's personal use of the vacation rental property, and that would really fall under homeowners insurance, right? You live there, you may have a dinner party, you may have kids that come over to jump on the trampoline, on and on and on. Other periods throughout the year, and most of the time, it's really a business. It's a short-term rental where you're giving your keys to somebody and they're staying there for, say, a week. They're unfamiliar with the property. They don't know where the lights are. They don't necessarily, shovel the driveway and on and on. It's a completely different exposure, though. It's business exposure, right? Obviously, the liability is much higher, etc. And then you may have periods throughout the year, if we define short-term rentals as 30 days, where you may have a tenant. And this has really popped up a lot in the last 6 months to a year with COVID, where we have these digital nomads, right? All these young bucks at Facebook and Amazon and Google, and they all make, $500,000 a year salaries, and they want to go rent a place for 3 months and live there and work remote for Google or Facebook. Technically, that's a tenant situation. They've taken the property for over a month. You're not there necessarily shoveling the snow and changing the light bulbs. They're living there, right? So that's landlord insurance. And then the fourth component, it gets more confusing. There's going to be periods of vacancy where nobody may be at this vacation rental property, which insurance companies hate, right? Because nobody's there to turn off the water. So you may have an off season, like Big Sky, Montana, where I live. There's an off season, all the mountains around Colorado, the same thing. So there may be a month where nobody is actually staying at that property. That increases the exposure of the property. So really, you honestly almost need 4 different types of insurance. And the reason the market hasn't adjusted to this, and you can't call State Farm, Allstate, Nationwide, Liberty Mutual, USAA, and say, hey, I've got this property, but I'm going to have multiple uses of the property. There's periods where I'm going to short-term rent on Airbnb. I may stay there. It may be vacant. They don't know how to underwrite for it. They don't know the correct loss ratio. So what we did 6 years ago is we said, let's encompass all this exposure into one policy where we can cover all facets of the property, and let's put a rate on it. And truth be told, the rate was way too low. Lloyd's lost a lot of money the first 2, 3, 4 years, and that's why our rates have systematically gone up every year, except for the last 2 years where we found our sweet spot. We now know this exposure. We've insured over 50,000 homes. We have our secret sauce in underwriting, and we have an incredible insurance program. But fundamentally, for the people listening, it's a very unique exposure. It's not that if they have homeowners insurance or landlord or business, they have no coverage. It's just that they probably have a lot of gaps in coverage in different areas depending on the vacancy, the occupancy of the home. So that's kind of a 30,000 foot view.
And I remember it was last year during COVID, so I think it was like April timeframe. We were dead short-term rental wise, and we were like, okay, how do we keep the revenue flowing? Because we had nobody staying at the houses. So the question that came up is like, okay, these people are insured to do short-term rentals. So I called Jordan up, he works at Proper Insurance, and I was like, hey, can we do midterm rentals or corporate rentals? Because we had a lot of demand for that. And like that's gonna be how we're gonna keep our homes full. And he's like, yep, our insurance covers that too. And I was like, awesome, we're good. So we were able to do both midterm rentals, so like 1 to 6 month leases, as well as short terms. And our homeowners, if they use Proper, they're covered to do that. And it covers all the gaps that could be at play in those different types of uses.
And this is extremely important when I'm out on the business development and talking to new homeowners. Some of them, as they begin working with us, they're learning everything through us from the beginning. And a big one is insurance. And it's kind of an unknown area for them to navigate. And so we work with the people who just have the homeowner's insurance policy, or that's what they currently have, or some folks who are moving from long-term property management and they have your typical tenant insurance. And when you talk about wrapping it all up into short-term rental insurance, like you had talked about, it almost covers 4 different activities in the home. And what do you see when maybe you're not out there talking on the front lines to customers of Proper as often with your 30,000 foot view, but when you're out there speaking to people and you're letting them know the difference between a typical homeowner's insurance policy and then short-term rental insurance policy, how do you kind of break that down for them to make some of those distinctions when talking to the folks who are just like, well, I've got a homeowner's insurance policy and my insurance company, like you had mentioned, maybe State Farm or one of your traditional ones, said they can just write in there that they'll cover less than 29-day stays.
Right. Great question. And one of the things I love about insurance is it's a contract, right? I was always good at math growing up because for whatever reason, 2 + 2 = 4 just made sense to me, right? There wasn't a lot of sort of there wasn't a lot of speculative talk about it, right, if you will. It's very transparent, and an insurance contract is the same way. And so I'll put out there to your listeners, though, first off, the number one question we get is why are you so expensive, right? Like, my homeowner's insurance is $1,500 and Proper's $2,500. Let's say $1,000 more a year or something. And the answer is we cover more. Like, insurance carriers have these loss ratios down to a science, right? They're in the business of making money. So if you have cheap insurance or less expensive insurance, you have to wonder, well, why is it less expensive? The reason is it doesn't cover certain things. Therefore, they don't have to pay out claims, so they can charge less. So a great example we do with people is we say, look, send us your actual contract, and then we will highlight in your contract where you have coverage gaps, and then you can make an informed decision whether you want to upgrade your insurance or not. 35% close ratio over the last 7 years. We've actually held that close ratio all the way through. So there's a lot of people who ultimately decide, look, I don't want to pay the extra $1,000 for these additional coverages. It's never going to happen to me, and I think insurance is kind of a scam anyway, and I just buy the cheapest insurance I can get. That's perfectly fine. That's your decision. But the first thing we did to our policy is damage caused by a guest, okay? A lot of people do not realize, but when you entrust your property to someone else, there is no coverage for criminal acts committed by that person. So we love examples in insurance, right? So let's say you own a coffee shop and you decide to take a vacation for a week, and you give your keys to the coffee shop to your awesome brother, Philip, right? And you say, hey, bro, watch my coffee shop while I'm out of town, okay? You've now entrusted your keys to your brother. You said, look over my coffee shop while I'm out of town. Okay, great. You come home a week later, you go into your coffee shop, and all of your coffee commercial equipment is gone. We're talking $50,000 worth of barista machines and cups and dishes, everything. It's all gone, right? And you go, I can't believe it. My brother stole all my stuff. So you call your insurance company and you file an insurance claim for theft. You say, somebody stole all my commercial coffee equipment. I need to file a claim. And they go, okay, great. Take some photos. Did they break in? Did they come through the ceiling? The video everybody's seen of the bandits, who fall through the ceiling in the when they're trying to rob the convenience store. What happened? How did he get in? And you go, well, I actually gave him the keys. What do you mean? You gave your brother the keys and then he stole it? It's right there in the contract, you guys. This is what I'm talking about. 2 + 2 = 4. It says anyone you entrust your property to, there is no coverage for criminal acts. So what are 2 crimes that we can think of that come up a lot in vacation rentals? One is theft. That is a crime. That's a misdemeanor. That's not a civil matter. Number 2, vandalism. Vandalism is a crime. So the $1 million question is, you entrust your property to short-term rental guests. They throw a party. They cause $20,000 in damage to your property. Unless you're insured with Proper, you have no coverage from anyone else in the market. So to your original question, not everybody wants that. They go, you know what? I vet all my guests. I look at their IDs. I talk to their family. I don't want to pay more for that coverage because I don't ever think it's going to happen to me. And ultimately, they don't buy our insurance. But that's what we do, is we educate people on why we're more expensive, and then we give them a decision whether they want to upgrade or not.
Darren, would that also apply to assault? Like, let's say the guest assaulted the neighbor and you've entrusted your property to that guest. Does that fall still within the realm of the insurance for that home, or does that start falling outside insurance because it was or like battery? Like, let's say just 2 neighbors get into an altercation and one happens to be our short-term rental guest at a home.
Right. What a great question. And just so everybody knows, assault can be verbal, battery is touching, right? So if you actually touch somebody, that's the battery part of assault and battery. Because people could sue you for screaming at your neighbor. You could say verbally assaulted me, etc. So it's assault and battery. It wouldn't under that exclusion because every insurance policy has two sections. It has one for property coverage and then one for liability coverage. So under the property coverage section, that's where that entrustment to others exclusion is. But under the liability section, all insurance basically states the top of the policy the same. We will pay for any bodily injury or property damage you could be held personally liable for, right? So a kid comes over to jump at your house and he gets injured on the tramp and their parents sue you. That's kind of the classic homeowners example, right? I'm suing you because my kid got injured at your property, whatever. The problem with assault and battery is insurance companies just come out and flat exclude it. So if you bring up the host protection policy, a lot of your listeners are familiar with Airbnb host protection, the free liability they give to everybody, right? If you pull that up online and you actually look at the summary, one of their first exclusions under liability is assault and battery. And the reason being is they're very expensive claims. They take a long time to litigate, and they're just super expensive. So they've come out and said, look, no, you don't have any coverage. Proper is one of the only carriers on the market that does not have an assault and battery exclusion. We have been involved in some very odd claims over the years, invasion of privacy, lots of stories for you guys. Probably save that for another day, but you're absolutely right, because in the world of insurance, it all comes down to the question, why? Why did this happen, right? So let's assume that one of the neighbors of a vacation rental property is ultimately assaulted from somebody who's been drinking too much at the vacation rental. And they come back and they sue the owner of the vacation rental property and or possibly the manager who's managing it. And they say, look, I got beat up, I was assaulted. Why did this happen? Why is my face beat up, and why do I have emotional distress, and on and on and on? Ultimately, I mean, that's a great question, right? Why did this happen? And it's a pretty good argument to say, look, this would not have happened had the mixed martial artist, 3-time champion from Croatia, decided to come to the U.S. and rent your vacation rental and beat me up because he drank too much. I mean, at the end of the day, you're running a business, and there's liability that comes with that. And it's a pretty hard argument to say, look, the reason I'm dealing with this is because of you, because you're running a hotel and you're my neighbor. So that's a coverage you want to have. It's very rare that that happens. It's a very low statistically that's ever going to happen, but it could. And Proper's one of the only.
He's also got 3 felons, and he's a sex offender, and now you're under gross negligence for renting to that person who assaulted our neighbor. those are right. Like very, like you said, statistically improbable to happen, but
So Darren, on a maybe a little bit lighter note, when a home has damage from a guest or something that limits the next guest from checking in, Proper comes in and assists the homeowner in that. In terms of helping carry some of that lost revenue while damage is being taken care of. Is that correct?
That's correct, because the base of the policy is a commercial business policy. Now, again, we created a hybrid policy through our endorsements to cover all 4 occupancies. But yes, it's called lost business income. So it's no different than any other business. So in the event that there's a 2-week restoration period to fix the water damage or fix the vandalism or fix any claim, maybe it's hail damage to your roof and you've got to have contractors there for 2 weeks to replace your roof, and you don't want to rent the property while the roof is under construction, obviously. Any covered cause of loss that results in lost bookings, the revenue is protected.
That's wonderful. When I speak to owners out there and they hear that, it's a game changer for them in their mind.
Well, I've even seen it save several people. Like, that we're in the middle of the busy season, a big hailstorm comes, destroys their home. They need roof work for 2 weeks. It's their busy season. They've been counting on that all year. Proper comes in, says, hey, don't worry about it. We're going to cover that income. We're also going to replace your roof. And, yeah, I mean, I've seen it actually work and save people. So
our homes, and especially
yeah,
in,
homes
the
we
Colorado
manage.
area with hail, like you'd mentioned.
Yeah. I mean, you never know what can happen, and like if you're banking on your busy season to deliver most of the income for the year, and you have something happen, it's like you want to have something like Proper to cover income that's lost.
Well, and we skim on this on almost all our podcasts. There's a very distinct difference between running a Airbnb and then running a professional short-term rental and doing it properly from the beginning.
I like that pun you just did there.
Please.
Let me touch on that hail real quick. Because a lot of your listeners, I would imagine, are throughout the country and in hail areas. Oklahoma is a big hail area. The Front Range is a big hail area. Tennessee, and on and on. And so what a lot of carriers do, which consumers are not always aware of, is they put an endorsement on the policy called actual cash value, right? So a hailstorm comes through and damages your roof, but your roof happens to be 15 years old already. But the life expectancy of that roof and that manufacturer is 20 years. If it's $50,000 to replace that roof, you're going to have depreciation taken into consideration when you get your claims check. So simple math, 15 years old, 20. So a 75% reduction of that $50,000, which would be, I guess $12,500 if my math is correctly. So you get a check for $12,500. Versus Proper Insurance, we have full replacement cost valuation on our roofs. So to some of your clients who've probably had to deal with hail damage on the Front Range, we pay to completely replace that roof. And that's one of the big
huge
reasons our insurance is more expensive, actually. Again, let's add it up, guys. And we've had choices over the years. We're now almost 7 years into this. And every year we come into our renewal with Lloyd's, we always have two options. We either can reduce coverage, right? We could put an actual cash value on the roof. We could put a limitation on water damage. Water damage is huge. Broken water pipes, leaky ice makers, that kind of stuff. A lot of carriers put a $12,000 or $15,000 limit on that type of damage, and on and on. So that's one way to make money, right? We can reduce our coverage, or we can raise our rates to find that sweet spot, which we finally found 2 years ago. But that's the model we've always taken, is we're a coverage company. And we know that not everybody wants to buy that. For your clients, it's a no-brainer, being in the Front Range. They cannot roll the dice and have actual cash value on their roof, because the most likely insurance claim they're going to file over a 10-year period is hail damage or roof damage from hail. So anyway, I just wanted to touch on that real quick. So you always want to pull out your policy, read it, understand it. And we encourage people to call us who ultimately don't end up buying our insurance, because we're an education company. I mean, that's what we do. And we love educating people, regardless whether they buy our insurance or not, because that's the reputation and brand that
I see that on my end. A lot of times homeowners come on board with us will say, hey, will you take a look at my insurance policy? And I'll say, well, it's not really my area of expertise, but please get a hold of Proper, and at the bare minimum, use them as a resource to make sure that, maybe your insurance policy does cover it, and that's wonderful, because the goal is just to get you covered. But speak to them, let them give you the rundown, and maybe you'll walk away with one or two things you didn't know before, but now you at least have all the decision to make, or all the information to make an informed decision.
Well, right. And also real quick, from an E&O perspective, a lot of your audiences are probably managers like yourselves, right? Or looking to become, superstar managers like the company you've built. That question comes up a lot. Like, what is your obligation as a manager to verify they have the right insurance, and on and on and on? I mean, Proper is exclusively endorsed by Verbo as the preferred insurance carrier for their homeowners. They don't go out of their way and verify everybody has Proper, because obviously we would have written a lot more than 50,000 policies, but they just advise people that were out there, and then their hands are off it. Like, there's nothing you can do necessarily other than say, look, it's important, verify your coverage, here's our preferred vendor. And I would bet if we went through your book of business, probably half your owners are insured with us maybe. maybe 40%, maybe 60%. I don't know, but your job is
Yeah,
done.
I mean, you're so right. It's such
really
an education piece because, I mean, I think the decision being made here is usually like the quality of insurance versus the cost. I mean, that's what you're getting at is like, hey, our quality is much higher. It covers much more, but it's a little bit more expensive. And I mean, I just got an insurance quote from you guys. I just bought a house, got an insurance quote, and yeah, it came back a little bit more than what I would get, but I know I can have that peace of mind knowing like if something happens, I'm covered. And just sometimes having that peace of mind, and it's probably going to save me one day.
Absolutely. I mean, any one of these little things we talked about can easily make up that extra $1,000 a year if it took place.
Yeah. It's like one event that happens and you have proper, it's covered.
You'd be losing money not to do it.
Yeah.
Well, statistically speaking, it's every 9 years that a homeowner will file a homeowner's insurance claim. So where you fall on that spectrum is, anybody's guess, right? But you're right. I mean, the more you pay, the more you get. But really, it's a risk mitigation plan, right? Because what you're doing when you're buying insurance is you are transferring risk that you're unable to ultimately self-insure over to a company for a premium. So first example is always fire, right? What if you have an electrical fire at your house or lightning strikes your roof and ultimately your house burns to the ground, right? Most people, very few people in the country, other than the half of 1% or whatever, could afford to just self-insure that and be like, well, I'll just rebuild a new house, right? You want to call State Farm, Allstate, Proper, file an insurance claim, and your house is rebuilt, right? But you go on down the list, a great example is damage caused by a guest, right? I mean, some people will say, look, it's never going to happen to me. I don't want to pay more for that. I don't want to transfer that exposure over to Proper for $50 or $100 a year or whatever it ends up coming out to be. Our argument is always the liability, okay? That's the big one. Like the assault and battery exclusion and dog bites is a huge issue. Last year, $900 million was paid out by homeowners insurance carriers to settle dog bite claims in the United States. Average settlement, like $60,000 to $70,000. So again, you just kind of go on down the list, but that's what you want to. The message we want to get across to your listeners is this is a risk mitigation plan. What am I willing to take on myself, and what do I want to transfer over to an insurance company?
Yeah, that's such a great way to look at it.
Let me ask you this quickly. You're in a position to answer this really well. When a guest stays in a hosted home, they have a non-refundable fee they pay for $2,500 of damage insurance for that reservation. Where would that end? Obviously, monetarily, it would end at $2,500. But where would the damage insurance end, and then the insurance policy, the short-term rental policy, pick up for instances like vandalism?
Yeah, good question. And ultimately, that's why we started Waivo, because every insurance policy has a deductible, right, of $1,000 or $2,500, $5 or $10. Those are the standard deductible options. Most of our book of business is $1,000 deductible. People, again, they don't want to transfer that risk, but if you take a $2,500 deductible, your premium goes down slightly, obviously, and so on and so forth. Now, with Waivo, we just basically solved the security deposit issue. That was the whole thing, right? It's like, let's fund this. Let's get rid of the security deposits. They're a pain point. There's enough money to go around. Everybody's happy, move on with life. So that's what we did with Waivo. But it would depend on what the deductible was on the home policy. So if you guys are running a $2,500 damage program and the homeowner had a $1,000 deductible with Proper, that's a great scenario for you guys because you don't have to run it through Proper. You don't have to call Proper and go, hey, here's a vandalism claim. Waivo is going to pay the first $1,000, but then Proper and Waivo are going to split that additional $1,500, right? Because that's what would happen in the world of business, if you will. There's oftentimes that insurance overlaps, and so that would be a scenario where there's an overlap of insurance, and typically when that happens, they co-defend on the claim. So it's split 50-50. Bigger liability claims, $1 million claim or something like that, you can get into like a pro rata kind of thing. Well, this company only insured for 600 and this had the house insured for $1 million, so they should take 30 and they should take 70. So there are scenarios like that. But for the most part, if you have an overlap in coverage, both carriers will just split that. But you're not obligated to report it to the insurance carrier. So how cool is that with the owner? You could go, look, in any other normal circumstance, you'd want to be filing a claim here on your home insurance. $2,500 in damage, you've got a $1,000 deductible, get a check from Proper for $1,500, and then submit that $1,000 damage notice to Waivo, right? But why deal with that nonsense? Just submit it through Waivo, explain to your owner how great you are, and you save them a potential rate increase on Proper. Don't have to deal with your homeowner's insurance for the small stuff, run it through Waivo.
So what I think I'm getting out of that is basically if you're using, let's say you're using Hosty as your property manager, and Hosty is using Waivo, and you also get Proper Insurance as your homeowner's insurance, then as long as your deductible is not over $2,500, you wouldn't have to pay a deductible ever if you had a claim.
No. Close. I see where you're going with this, but that's just damage associated with a guest. So if a hailstorm came through, your homeowner's still stuck with a $2,500 deductible. That's not a Waivo damage.
Oh, that's right.
Notice,
okay.
Right?
If it's damage caused
but
by
the overlap.
Yeah, exactly. Yep. Okay.
Right.
That makes sense.
If it's damage caused by a guest, right? Yeah, and I would encourage them to match that up. I mean, it kind of makes sense, right? Where Waivo ends, Proper picks up. But just make sure if you ever talk to a homeowner on that, you're explaining this is one piece of Proper. Water damage, hail damage, lightning storms, broken water pipes, on and on. There's still that $2,500 deductible. So that's why ultimately most people choose a $1,000 deductible on Proper, because they're like, look, at any given moment, I can go buy new tires, right? I have a bank account. We can't call our parents anymore. We're all grown adults, right? It's like at any moment, pretty much anyone has $1,000, right? They're like, okay, I could do $1,000 for the deductible. Once you start getting 25, 5, 10, I mean, a lot of your clients are probably financially successful, and maybe they want to do a $5,000. They go, look, I'd never call my insurance carrier unless I got hit with something over $5,000. But overall, most people like the $1,000 deductible.
So breaking it down for simpler minds like myself to understand, an example, we've got a putting green in the backyard of one of our homes. If a guest was to put a golf ball through a window and say that window replacement costs $2,000, but their deductible is $1,000, instead of running that through Proper, potentially having everything go up, we're able to pivot, go through Waivo, and have up to $2,500 of that covered without it ever being reported to Proper Insurance, potentially raising their deductible.
Wait a second, that gets a little tricky because they cause damage to another building that's not the house.
No, the house in that example. So they through the home that they were staying in, and maybe we're getting convoluted here.
Absolutely, you got it spot on. You totally understand it.
And when I work with people who are coming from long-term property management, they're long-term property management folks. They have 3-4 homes they've always been doing. They talk about how in their heads, the risk of running a short-term rental and the damage to the home is perceived to be so much greater than in a long-term rental scenario. But as you begin to walk them through all the different layers of protection that's really in place, it's kind of a game changer. It's the coverage you can get in short-term rentals as opposed to what you see in long-term rentals is almost a blessing for people moving from long-term rentals to short-term rentals.
I mean, me and Philip we worked in, we were military before in the Air Force, and like our job was to protect, top secret information, right? Like we worked in cybersecurity on that side of things. And it's like, we almost take the same approach with Hosty. It's like multiple layers of defense. Like our first layer is the guest screening portion. It's the guest screening and cameras at the house, outside of the house that are just looking inside. But that's like your first layer of defense is like, okay, who's coming in the home? We're checking each reservation. We're making them provide IDs. We're doing kind of soft background checks on every guest that's coming through. And then our second layer is Waivo. It's Waivo and Airbnb and all those different insurance. And, that's the second layer. And then the third layer is the Proper Insurance. Now you get into your homeowner's insurance and your liability protection there. So it's like it, like you said, it's actually sometimes better because now your home's getting cleaned multiple times a week. We're taking better. We have a better eye on your home, whereas a long-term rental, you kind of lose control for a year or 2 years. And
Absolutely.
you don't know like what damage is actually being caused. Is the tenant going to report that damage to you, or are they not?
Yes, you've got kind of, Darren, what you had said. You almost have, you're covering 4 different activities of the home, as opposed to in traditional long-term, you're just covering that aspect of it. But you're covering 4 different activities of the home in short-term rental insurance, and you've got an added layer of $2,500 of damage insurance protection.
Yeah, it's a good way to look at it. And that was a big piece of when we put Waivo together, is we understand that this is a growing business, a growing industry, right? And there is that fear of the owners that, high volume, high traffic, and it's just this sort of anxiety that surrounds the property. And that brochure that I'm sure we gave you guys, and maybe you recreated it and white label branded it on your own, but that does give them peace of mind, right? You go, look, every booking is protected by this damage protection. In the event that it happens, it's there. Hopefully it never happens and you'll never know, because it's a clock, it's a lamp, it's a dresser. This is sort of like not big deal stuff, but I agree. I mean, I knew that was going to be a big selling point of Waivo down the road, was the ability to onboard new owners and de-escalate that anxiety surrounding this, minor damage at the properties.
It's almost like you sign a lease for 1 year and just say you take a $2,000 security deposit. You have $2,000 to spread out over 365 days. When you use guest damage insurance, you have $2,500 to spread out over 2 to 7 days is the typical booking.
Absolutely. And the funny thing about that, I'm sorry, I just have to comment on it though, but it's the regulations, right, that are happening everywhere. And I'm thinking of the nuisance complaint, right? That's always the big one, nuisance complaint. And whenever I see people at trade shows and everything else, and I go to these short-term rental regulation conferences, I go, okay, well, let me ask you this, okay? So long-term rentals are fine, right? Oh, they've been around forever. They're in our beautiful neighborhood. Very few places can you not long-term rent a property, right? So would you rather have one weekend where maybe some louder, younger, fun folks come in and play music too loud, or would you rather have someone move in and sign a lease and play music loud every night for a year? It's absolutely absurd. And it goes back to that study they did in Nashville of the nuisance complaints, and the nuisance complaints for trash, parking, noise are significantly higher at long-term rental properties than they are at short-term rentals. So the argument is done. It doesn't make any sense, but we'll live to fight that in another podcast.
Well, I think that's all the time we have, actually. So, what was that, 40 minutes? So we're going to wrap it up here. Darren, thanks so much for coming on. Pleasure to have you on here, and a pleasure to work with you too. It's been awesome, and you've really kind of helped us figure this space out from an insurance perspective. You helped us helped our homeowners figure out how to navigate this space so they can earn money on their properties. And it's been a pleasure to work with you, and thanks so much for coming on the podcast.
Yeah, you're welcome.
Thank you.
Appreciate it. Thank you.